markets running out of storage space, something as basic. You know, I remember when I was younger and my environmental studies teacher used to say, look, you know, there's not enough oil in the world, so we need to conserve it. But I think the entire COVID pandemic has flipped that theory on its head. Just to start off with, for our viewers who are new to the subject, what exactly is happening with tanker rates? What does the word contango as well mean? Because that too is a jargon.
Yes, thanks for having me. So as we enter this year, oil tankers fundamentals were already quite good. Year to date, we see two main factors. One is the temporary collapse of the OPEC Plus price cooperation. So this increased the oil supply into the market. And we also have the COVID-19 outbreak, which is just destroying demand. So this creates a collapse in oil prices and also a contango in the futures curve. So even though we believe that the oil supply situation will abate into May and June as OPEC Plus came to an agreement to cut production, we do still see incredible implications from the contango in the futures curve. So right now, as you mentioned, a VLCC could potentially store oil and earn $150,000 a day for 6 months. So this means that vessels are being used more and more for floating storage. They're also sailing slower due to the time value of their cargo, and we also see longer discharge times at the end of the trade.
Okay. What has happened to the cost of ships, Joakim? We believe there's also a big increase in the price of assets. I mean, are you seeing increased ship trading at your end?
So as we came into the year, asset prices were already quite high. So what I think the main factor right now is the longevity of the storage economics. So how long this is going to last is challenging to predict. It's going to last as long as there is oil oversupply. On our expectations, we see a balanced market from the second half of 2020. This is obviously highly uncertain, and we have a wide range of outcomes, ranging from 5% to 25% of the oil tanker fleet being tied up in floating storage at some point during this year. So against this, we have an offsetting factor of 10% lost demand for oil tankers from less oil supply into the market. So this is kind of the short-term snapshot, and the tanker rates are going to be very high as long as these storage economics persist, and asset prices are also being well supported. The main point here is how long it is going to last, and the longer it lasts, the bigger the implications are for the medium term. So if you look to especially the US, the producers there are highly responsive to lower energy prices. And we would also see a big destocking of oil at some point, which is negative for oil tankers. So we see large implications in the medium term for less hydrocarbon production from the US being negative for oil tankers. But right now, enjoy it while it lasts. That's our thought for investors. But at some point, we think earnings and asset prices in oil tankers will crash.
Okay, you know, we would love to extend this conversation, but unfortunately we're a bit short on time. Thank you so much, Joakim, with your valuable inputs on this topic. And I suppose it's something that will be here for a while, this entire situation where we are seeing a rise in tanker rates. Many thanks for joining in.